All right. Very good evening, everyone. Welcome back to our weekly webinar. Okay, this will be the last of this series of this workshop. Okay, so for this, we will go through the content later. Just roughly to tell you, this will be the last for November. Okay, so December we might be planning for other webinars as well. So we will inform everyone again. Okay, so if you have any questions, right, you can put it in the Q&A later. Okay, then I will continue with the slides first. Okay, so today content basically is just trading psychology. Okay, trading psychology out of the past few weeks, I mean, we have been sharing about like all the basics, right? Support and resistance. Then after that, market cycles, indicators. Okay, so now come to the last portion where I feel is really the difference okay, between a successful trader, okay, or even investor, okay, compared to someone that regularly is just making losses in the market. Okay, so today we will be talking more on the trading psychology. Okay, so basically, right, the table of content. Wait, hang on, let me take a look. Okay, so summary of week 3, right? What we went through last week: RSI, MACD, Fibonacci, and some of the charting. Okay, so how you can chart using these 3 indicators. Okay, so with that being said, if you remember what happened last week, right? Okay, the recording from last week is already up on YouTube, right? Okay, you can watch it from our YouTube channel. Later we will give you the link as well. Okay, so for indicators wise, I always feel okay, it's always best that you have confluence, irregardless which indicator you are using. Okay, confluence meaning to say you are looking for additional either, I mean, it can just be simple candlestick patterns, okay, or market or price action, okay, or with support and resistance, trend line, or you can use RSI and MACD together. Okay, so having additional confluence, right, give you more confidence, okay, to place a trade or when to exit, or even looking out for reversal or whether the trend is going to continue, continuation of trend and stuff like that. Okay, so without further ado, today's content, right, is basically trading psychology. Okay, the slides is just going to be on this slide. We are just going to be on this slide and just keep talking. Okay, and of course slowly through this webinar, right, later we will show you on chart itself, okay, how this trading psychology really kicks in when the market participants are in basically trading or investing. Okay, then also to share a bit more on how you can look out for psychological levels on the chart itself. So you, in a way, it's more like a psychological level for equities, right? Is mainly just to look out for take profits. Okay, because for example, the counter that you're in, they are running all-time high, or they are just an IPO counter, right? You don't have much data to really pinpoint. Okay, so we will share our, I mean, how we look for psychological level. Okay, then from there we will just look at charts basically. Okay, so if you have any questions for this webinar or even for previous webinars, right, the past three webinars, okay, you can just ask the question, okay, just solely on TA related. Okay, then Xiong, anything you want to share first?
Yeah, just a big hi to everyone. Thanks for coming. So this is the last session of our series. Yeah, I thought this topic will be much more interesting than the rest. But of course, if you guys want to check out all the basic indicators that we went through, do check out the previous session. So we'll send the link in a moment's time. But I think in terms of trading psychology wise, it's gonna be about 50%. It's gonna be the difference between each trader. That means however your trade, you all might place the same trade, but because of this trading psychology wise, you know, the position you all take, the amount, the time that you all hold, it's gonna be different. So yeah, so later we're gonna show you guys some charts, and we're gonna show you how we're gonna place trade, what we're gonna do during the trades, what we are thinking when we're putting the trades, because all these will be very, very important. And you should be aware of it. So yeah, over to you, Ying.
Okay, thank you, Xiong. Okay, so to start off this webinar, right, I just want to share like trading psychology, right? It's not just like the mental state or the mindset that you are in while trading. Okay, because firstly, right, before you get in the market, I mean, if let's say you are new to the market, right, you will look out for a lot and many other information. Okay, can be macro, can be financial statements, can be technical analysis. Okay, all these will come to your mind because you know that okay, all this is what drives the market, right? Like okay, if you are looking at equities, right, then you have financial statement for the company. Okay, then you need to look at macros. Okay, then for example, you are trading other asset classes, right? Like FX, your macros are going to play a part. Okay, like even you play gold, right? Macros is going to move the price, like whether is there war in the like around the world, uncertainty and stuff like that. Okay, so to begin, like really begin your this trading. I mean, okay lah, everyone. I take it as everyone trades already, right, or invest already. So, but to really understand, right, like firstly, whether how you can minimize all this fear and greed. You see the first point. Okay, fear and greed, everyone will have a confirm one. Okay, so one way, right, how I did, I mean, I just sharing my experience, right, is firstly, you have so many information around, okay, especially they are so readily available. So in a way, everyone also have this information. Okay, so what really give you that edge, right, in the market, right, is firstly, right, you need to understand what kind of trader you are, okay, or investor per se. All right, because the time frame that you use, the strategy that you use will varies from everyone. Okay, because you need to understand like how much time are you okay to put into the market. Okay, okay to meaning to say not, I mean, read news, all this is standard lah. Okay, but in terms of looking at chart, let's say you want to use technical analysis. Okay, then how much time can you dedicate to the chart? Okay, when I say dedicate, right, it's not like okay, every day I can see 2 hours. Yes, 2 hours is decent already. Okay, but the 2 hours, if every day is a different 2 hours, right, like different time period, or every hour you watch like maybe 10 minutes. Okay, it's very different. Okay, what I mean by dedicating the time to it, right, is every day at the timing, at the same time, you are sitting down looking at how the market run at that time. Okay, so for equities, maybe the market opens at 10:30 now, right? So maybe the time that you want to sit down maybe is 10 p.m. Okay, why? You want to look at pre-market, how the price is running. Then after that, you're looking into the session opening. Okay, then you are playing on the session opening. That's why you are putting maybe 1-2 hours into that period. Okay, then every day in, day out, is just going to be the same timing. Okay, of course, you might have extra time. You can look before the market open and maybe look slightly after the market open. Okay, but slightly after that one, I will go more in depth into why I try my best not to do that. Okay, so firstly is like you need to come up with your own trading plan. Okay, trading plan sounds like a very simple term. Trading plan. Okay, trading plan. You just need to know where to buy, where to sell. Okay, your strategy. What is your strategy? But when it comes to technical analysis, right, your TA strategy, right, have to be very methodology. Basically you need to make it. There's a method to it, okay. You need to stick to step one. Okay, step one got this, step two got this, step three got this, or how many steps you have. Okay, so if you don't meet the criteria, right, or the price don't show you how your method, I mean, it just don't take the boxes in a method, right, basically there's nothing to do. Okay, because personally, like myself, right, I mean, when I trade on my own, I basically looking at two, how do you call it? Okay, one is gold, okay, another is pound yen, which is forex and gold lah, basically. Okay, I used to look at all 28 pairs of major and cross pairs, okay, on forex, because back then I'm doing swing. When I do swing, I need to look at more because I need to find opportunities that when price start to come in, okay, I'm holding for the longer term. But when I'm doing intraday now, I'm just looking at two. Why? Because basically I know that if my setup is going to happen every day, okay, during my session, or maybe the next session, I just need to wait for price to come or wait for the thing to happen. Okay, the thing to happen is basically my own method lah. Okay, I just see, okay, I think through the past 3 weeks or all my webinars, right, basically what I have been doing is I look for supply and demand. I know they are trading in a range. I'm not going to do anything. Maybe there's a minor area. I will look out for levels. Okay, then I just wait for the break. Basically like a breakout trader. Okay, but of course there's more to it lah, because breakout, every time there's a breakout, right, probability of it becoming a fake out, right, is quite high, right? Because they break out, then after that they fake out. So all this comes into play, right, when your trading psychology you need to understand what you are trying to get out of the market or the trade itself. Okay, so with a trading plan, okay, it can be any strategy lah. I mean, there's so many strategy out there, and I mean, just by looking at the indicators, right? There's so many. So I think trading plan itself, right? You in a way you really need to stick to that one type in terms of like indicator. But of course, with the indicator, you might have a few setups. Okay, trading plan and setup is very different. Trading plan is okay. I looking at this indicator, they need to show something like that. Okay, price action is moving in a certain way. Okay, then I look for something to do. Okay, but when it comes to setups, right, it's basically okay. Now the price is already running. Okay, later we just, I mean, if possible, I will just show some examples on chart as well. Okay, so for example, the price is already running. Okay, what should I see on the candlestick or basically candlestick or bar chart, right? What should you be seeing before you take a trigger? Okay, so that's your setup. Okay, it can be candlestick patterns, it can be EMA on a lower time frame, it can be anything. Okay, so all these I'm just talking in terms of intraday. Okay, swing wise, of course, swing you don't really need to commit as much time as intraday because basically you got Saturday, Sunday. Okay, this 2 days is confirm your homework day. Homework day as in market already closed. Okay, everything already confirmed for the week already. Candles already closed already. Okay, so for the week itself, they already closed. Saturday, Sunday is how you plan ahead. Okay, next week, where should I set my limits? What should I be looking out for? What can I do? Okay, so in terms of swing trading plan, right? Same thing. I used to do swing as well. I use supply and demand to do swing. Okay, just at a longer horizon, and also I don't really trade off a range anymore. Okay, so in swing, what I did was more like a contrarian. Okay, I wait for price to reach the extreme levels. Okay, then I see okay whether is it my key levels. Then yes, I take a trigger with the price action in my favor. Then that's it. Then I hold it up. Okay, but of course the holding out phase, then there's a lot of other stuff that I need to manage. Okay, that one we will share also. So trading plan, yeah lah. Then investing, I myself I don't hold any stocks or anything. Okay, because I mean as a trader, I mean it's just opportunity cost, right? As a trader, my funds can be parked. I mean, of course, it's riskier, lah. Then I just need to manage the risk, right? That's why there's this trading psychology thing. Okay, but to me, is opportunity cost is always there, right? So if I'm trading it day in, day out, right, I'm making 0.5%, 0.8%, 1%, or slightly more, every day, then I don't need to park for, I mean, get into a stock for maybe like dividend or even like their capital gain, which is quite small lah, comparing the capital that I'm going to put in. Okay, but with that being said, of course, I'm playing more on I'm playing derivatives, right? There's leverage, so it's very different lah. So you need to understand firstly what you want to do. Okay, what can you do lah? Basically with your time. Okay, then with all this said, okay, if you are doing swing or intraday as I mean basically using technical analysis, right? Just I think I'll just summarize these 3 points. Okay, it's just 3 things that it's just attributes that you just need to subconsciously think of these 3 attributes, right? More or less you are quite secured for this TA portion already. Okay, because basically firstly discipline. Why discipline? Discipline to stick to your plan. Okay, stick to what you already planned. Okay, whether they hit the criteria or not. Of course, there's days that you don't have all these criteria, but the price move in your favor. Okay, but you are not in the trade. You are not going to do anything. Why? Discipline. Okay, you know that if your setup is going to happen frequently, often, or every day, you don't need to scared that this thing won't appear again. Okay, the only problem that people start to get FOMO, right, is like if your big moves start to come, right, people start to scared like, oh, I need to get in, right? Because they feel that this is the only time this is going to happen. Yeah, then means your setup, okay, probably just giving you that one in I don't know how long it's going to take. Okay, but if you have a setup that give you frequently, even for swing, right? That's why swing you need to expand the number of counters or even pairing that you're looking at, because you need to find the proper one, okay, for the week or the subsequent week that you can find a trigger. Okay, it won't be the same one, because the same one, let's say you triggered last week, right? This week it won't be a trigger already. If got trigger, means got problem already. Means already retrace back down, or you are just looking for the next level already. Then which is your TP already, right? So discipline, first thing, yeah, stick to your trading plan. Okay, then also basically stick to your trading plan, which also involves your take profit, entry, and stop loss. Okay, because one very big problem is stop loss. Okay, equities maybe let's say you hold for long term, right? You feel that okay, there's still value, okay, the macros are still strong, financials still strong. Technically, you don't really need a stop loss unless you're trading it. Okay. But also because TA, I think mainly people think that TA is used more on a lower time frame, okay, for swing and intraday. So stop loss, right? One problem that people really face, right, is they hold on to hope. Okay, hope in trading very dangerous. This one I really need to tell you because I mean I lost money before now, of course. That's why I can share all this. Okay, I don't start out as a profitable trader. I mean, okay, I've been trading for 10 years. The only time I started being consistent, right? I started with equities. Okay, I traded equities for I think 3 or 4 years. Okay, so I joined competition and all that. Okay, then win. Of course, I feel okay. I can continue to trade because national competition still can win. Still not too bad lah. I mean, maybe got a flair or maybe it's luck. I don't know. Okay, so slowly from there I shifted to Forex and commerce. Oh, that's the big problem. Why? Equities, equity space, right? I'm looking at a lot more on volume. I'm looking more on OEV, stuff like that. I just feel that, okay, once we have the market depth, okay, we see orders getting taken away, we go, right? Equities. But once I shifted to Forex, right, we don't have such thing. Okay, FX itself, volume itself is decentralized already. Okay, volume, of course, that's why I say your volume always take outliers. Don't take all the in the middle one because it's basically it's not going to tell you anything. There's no volume spike to it. Okay, so when shifted to FX, oh, that's where the big problem comes. Okay, market more volatile, right? The capital that I put in is not as much, right? Because it's leverage. Okay, so to me it's okay. Let's say I play a one lot. Okay, one lot is like 100,000 of the FX lah. Okay, one lot is maybe with leverage maybe they cost me like 2,500. Okay, for example, every dollar move, not even every dollar, it's every cent move, right? Every pip lah, they call it pips lah. Okay, it's how they count the value in FX and commerce, right? So every value is probably $1. Okay, the point itself and the pips, one pip is $10 for every lot. So to me, it's okay lah. $10 move. Okay, I'm fine. I put my stop loss maybe 10 pip, 7 pip, 12 pips. Okay, at most I lose like $130, $70. Okay, I'm fine with it. Okay, but the problem comes when the chart keep showing you, right, there's probability of it going in your direction. But then again, it's trying to trap you. You have this uncertainty already. So you start to doubt yourself. You start to think a lot more. Then that's the problem because you hope that, okay, they still trapping me, not going to get out of me, not going to SL me. Never mind. I shift slightly more first. I shift slightly more, never mind. I hope that this will go up because it's technically still valid. My plan is still valid. Okay, it might still run out. It's just that, oh, they are cutting close, very close to my SL. I shift a bit. Okay, from maybe 10, I shift to 15, right? So with that, right, you already lost additional half a trade if you get SL. Okay, that's a very big problem because if, let's say you are playing intraday, logically, if you are playing anything below M30, right, most of the time you're just looking for one-to-one. Okay, H1 onwards, maybe you can look for 1 to 3, 1 to 5, 1 to 6. Daily swing, you definitely can look for 1 to 5, 1 to 6 easily, right? So if I'm on the intraday, okay, I'm just going to lose additional half because I feel hopeful, okay, because I put a hope there, like, oh, hoping that it will go out. I pray, I just pray very hard, okay, but praying doesn't work in the market, okay. I want to really say this is because I pray very hard before lah. I mean, in the market, right? Wow, keep praying, hope. But I mean, end of the day, I still have my losing days, losing streak. I lost quite a huge sum, okay, before I started tweaking all of this and the mental side of it, right? That's why I mean, when it comes to trading psychology, I think from what I went through, I think I can share with you more on it because I've been through the ups, I've been through the down, I've been through the coming up again. Okay, so it's just a full cycle back again lah. Okay, so SL first thing, okay, discipline to stick to your plan. Okay, very very important. Okay, second, courage. Why courage? Okay, people ask me what courage. Well, it means I whack the market. I whack very hard. No, the courage is not to whack the market. Okay, the courage is you have the courage to cut your stop loss at where it is, or even earlier. You have the courage to follow your plan. Okay, you have the courage to enter when your plan tell you that, okay, this is the plan. So discipline and courage is basically together already. Okay, you need to have the courage to be disciplined. Why do I say that in the market? Okay, why do I say that? If I'm just talking about technical analysis, Okay, because you have many times, right? Like I say, you will feel FOMO. Okay, fear of missing out. Confirm will have one. You will scared. Not scared. Scared is two things. Scared is got two feeling. Scared. Scared that you not in the trade. Scared that won't hit your take profit. Scared that you will hit your SL. You know, scared. Scared are not in the trade. All these are you fear of missing out. You just scared that you are not inside. Okay, so it becomes a very huge problem because you will have this, you will feel scared every day. I can be very sure. I mean, I can be very sure about it because every day market is running 24/5. Okay, for equities. Okay, sorry, equity is not 24/5. It's like few hours for that 5 days. Okay, market opening. But for let's say other asset class, right? You basically running 24/5. You cannot be scared the whole day, lah. Right? So courage is basically you need to stick to what you have, okay, to your plan, okay. Then also have the courage to cut early or even take early. Of course, there's instances you take early, the thing continue to moon, right? But that's just another day, okay. Then the last one, patience, okay. Patience, I feel hardest. Oh, patience, I don't know how to explain patience, okay. It's just patience. To link back to discipline and courage, right? Patience is basically you have the patience to wait for your trade setup to happen, okay, whether it takes everything, okay, because the market is running while you are looking, and that's the problem. Because when you're really running, right, do you have the patience to really wait for it to come? Because at most times, a lot of people look at TA, right, they trade what they think, okay, not what they see. Okay, that's the problem. Because when you start to think what you want to trade, right, then you have a lot of ideas like, oh, okay, maybe this one give me bullish. Oh, look very bullish. Wow, I see this on Google. Wow, they say EMA cross. I long. Wow, go bullish. Yeah, but you trade what you think. Okay, until they really close out the candle and give you that confirmation, right? The confirm indicator in a sense. Okay, then that's where you will take something because you will go back to, okay, I have the courage to take my trigger, I have the courage to set my levels, okay, then my discipline, I sticking to it. So all these three patience is really very difficult because the market is running all the way while you're looking. So if you don't have the patience to wait, right, then most of the time you are just feeling the FOMO, then your fear and greed will start to kick in because you fear of missing out. You greedy, even if you are in the trade, let's say they are running in your direction. Oh, I'm in the trade, okay, then your greed come in already. Why? Wow, maybe you can run more because you keep thinking, okay, this one bullish. Oh, continue bullish. Yes, keep bullish. You can run until where, right? Or the fear. Oh, I scared. I want to get out. But your plan had say, okay, you haven't hit your level. So technically it should run. As long as it's valid, it should run. Okay, that's why it's always level to level. Okay, you can use any indicators, right? But end of the day, how price run is always level to level. Okay, because the market cycle, the cycle itself is just like this. They are running a rally, they are running a range, they are running a rally, running a range, whatever. But it's always a level to level thing. Okay, so this emotion portion of it, okay. I mean, okay, later then we talk about emotion, but discipline, courage, patience. I feel like these three to me is what slowly I need to. I mean, back then I fine tune it. Okay, what I understood from it. Okay, basically. Then after that, I came out with my own journal, my trade journal. Okay, trade journal meaning to say it's not like, oh, I trigger at this price. Oh, I TP at this price. I make how much dollar. That one not journal. That one is P&L. Okay, it's not journaling. Okay, so that's the problem because when I talk to people, I mean, I coach a few people. I mean, I coach people before, right? So I told them, okay, come, give me your trade journal. I want to see what happened, so I can help you tweak here and there to see what went wrong. I can, share my experience and all. So trade journal is not about just writing what trade you take. Oh, I see from the chart got double top, I short. I see from the chart got head and shoulder, inverted head and shoulder, I long. It's not this kind of trade journal. Trade journal is, yes, you can write your price, you can write what you see, okay, but most importantly, at the point when you trigger what you are feeling, I feel I mean, personally, this is how my trade journal slowly like evolve in a sense. Because initially, I just write trade I trade this I see this, I trade then I keep seeing, oh, I trade this, okay, this is the winning rate, okay, then I slowly implement into my strategy, right, like back testing or anything. But slowly I realized your trade journal, it should include your emotion at the point. Okay, emotion can be anything like, I mean, this emotion thing is very difficult to explain, right? Like I mean, I went to a course with Xiong before right? Then they were saying, oh, is sad or angry a negative emotion? Okay, technically it's not because they were saying that, oh, emotion, there's no good or bad emotions. Okay, it's just emotions. You're just feeling it. then I feel hungry. But hungry is not an emotion, hungry is what is hungry? Hungry is just hungry, lah, right? But okay, all this, right? What I'm trying to say is your trade journal, you need to pinpoint what you're feeling when you trigger. Okay, but the trade journal per trade, let's say you do per trade, right? The trade journal don't ends at where you trigger. Okay, it also includes where you take your, I mean, when you the profit, you take your profit, you take your SL. Okay, what are you feeling? So in a way, you are jotting down how you feel, right? You will be more aware of basically what you're feeling. Okay, because if you're feeling, let's say you trigger already, you say, wow, I don't feel good. Okay, I don't know good whether good is an emotion, but you don't feel good. You know that kind of feeling. Is I don't know how to explain, but when you trigger, you will know one in a sense. Or maybe they run a bit more already, you know that, oh, and here, oh, don't look as good. Because it might, even though it's still valid trade, okay, but maybe it's time to get out. Okay, because you see what the chart is printing. It's not what you think. It's not, oh, valid. It doesn't mean valid trade means all the way valid. You can be valid and still lose money. Okay, why? Because market might whip you up first. Then after that, okay, they show you a proper valid trade, right? So, like, in the market itself, it's not just, oh, you are correct direction. Maybe equities, yes, when you are investing, okay, but when it comes to intraday or swing, right, time is also a thing. Okay, time, because meaning to say, if you are early in the trade, you might not make the profit eventually. Okay, you get what I mean, like you trigger already, then you get SL, then the trade start to run in your direction, then you feel them, cannot, angry. Why? By right, the profit is mine, by right but market no by right one. Okay, you need to be very sure of that. Okay, so when it comes to trade journal, right, I think it's always nice to keep one, especially you are doing intraday. Okay, because at intraday you will run the risk of really over trading. When you have over trading, you will have revenge trading. Okay, so you will just keep going and going and going. Profit is the sky's the limit. Okay, profit, there's no end to it. Okay, but losses, once you finish your cap, finish your savings, finish everything, then that's it already. That's it for you already. Okay, so in market, always remember one more thing also, I just want to share. Market is about survival. Okay, if you can survive first year, you can be break even for the first year. Okay, I say good already. Why? It's not easy to break even if you're trading every day. I need to be very frank. Okay, it's not easy to break even if you're trading every day. Okay, so if you first year you trade, you can break even, right? Technically, yeah, I mean, yes, you don't have profits, so you don't feel good because hey, waste time. I don't make profits, so what, right? But I mean, it's a marathon, because unless you are telling me, okay, as after today webinar, right, I hear in YJ talk already, tomorrow I don't want to trade anymore. Okay, fine, then maybe tonight is your last night, right? Otherwise, if you are going to trade maybe for the next 30 years, okay, every year you have 252 trading days. Okay, times 10 years is already 2,500 days. 2,500 days, I say you make only 50%. That's 1,200. Okay, if your risk reward 1-to-1, okay then 10 years you break even. If your risk reward 1-to-1.1, right, you're already making that 100% already. All right, but of course 10 years, but of course all this comes down to all your strategy and also your trading psychology. Okay, so always think of it as a survival because it happened to me. This one I need to be very frank. I lost 6 figures before. Okay, because before I lost that 6 figure, I make 6 figure as well, right? And I'm making 5 figures daily. Okay, but it's not enough. Why? If one day, okay, I just give you this understanding. Back then I was young. Okay, I was young and foolish, right? I mean, in the market, okay, I make money, good. What? I mean, I want to chill, right? So, but the problem comes because if I can make, let's say, 10,000 a month, okay, for example, in trading, just trading intraday, why not I try to squeeze into 2 weeks? Because basically, I'm just doing the same thing, right? I just need to buy or sell. Two sides only, buy or sell, right? So, yeah, that's where the problem comes out. In 2 weeks, you can hit 10. Oh, means 1 month, okay, average out maybe 20. Maybe losing days a bit, maybe still got 15. Then that's the problem. Because why? 1 week, I will want to make 10 now. Okay, it comes to a point where every day I'm trying to make 25, 30. I mean, this is a true story. That's how I lost such a huge amount. I mean, but that was back then. That's probably like, what, 4, 5 years ago, right? So, because it becomes a problem where I know the profit is never ending one. I make profit, I want to buy car, buy house, buy bag, buy everything, watch, everything you want to buy. Why? Because you know that the profit will come. it's okay. Sorry, I say wrong. It's not that I know the profit will come. I know I can do it. That's the thing. It's not that I know the profit confirm come. But I know I can do it because I've been doing it. So it doesn't matter to me. I know next day, I just do the same thing. Right? I just need to keep grinding. One day cannot hit. I grind harder. It's not that I wait for the next day. I go harder. I find even more things to do. More things to do in the market. Okay, that's how I spend 16, 18 hours on like charts every day. Right? So it becomes a problem because the profit, there's no limit to it. I can just keep making and I don't feel happy about it. Okay, I'm really happy, yes, you got money, but happy in the sense that it's never enough because you can just keep going, you can just keep whacking until you make even more. Right? But then one fine day, okay, raining day, then you start to have your losing streak. Okay, market, I mean, like I say all the time, you don't have 100%. Okay, then that's where I start my losing streak. My losing streak, to be very frank, right, initial phase wasn't that bad. Okay, maybe I lost like 5 figures. Okay, small five, not even high five, small five. But to me, it's wow, sian. Now my winning streak gone. I today don't make money. I should try to make break even first, right? At least. I start to trade even more. Okay, that's where over trading comes in. That's revenge trading already. Why? Because I just keep trying to find trade. I can be in, out, in, out, in, out, in, out. I just keep trying to find. Okay, so this became a very bad habit because one day, okay, maybe next day you wake up, you say, hey, fine, okay, I stop. Okay, maybe you lose 5 figures, okay, stop. I refresh, I try again. Okay, but with over trading and revenge trading, you next day wake up, you want to get back again. Why? Because you want to hit back at least where you are getting, where you there. I mean, basically you are there already, right? So, but then you drop a bit, you take one step down. But no, the one step down make you feel very uncomfortable because you shouldn't be one step down, you should be one step up. I mean, this is my personal experience. Okay, that's how I felt. Like, really, that's how I felt. Okay, I shouldn't be, yeah, exactly. Exactly. So, my trading eventually, right, at that point, I'll be very, very honest also. At the point, my trading just becomes like gambling. Because same one, 50-50, right? I mean, I buy, sell, either side only lah. Just, you really, everything out of the window. Whatever I used to make my money, right? Everything I don't know already, I forget. But it's not that I forget, it's just that at the point my emotion just in out already. The devil is talking to me like, hey bro, come on. One day you will not making money already, how to eat? But I mean, that's what happened. So I wanted to share this experience is because, I mean, it happened. So the over trading, like, yeah, like, I mean, it also stems from overconfidence, right? Like you see from the slide itself, because you just get confidence because whatever I trigger, whatever I click, profit, whatever I click, profit, money, easy money. Okay, but it's not. Okay, it's simple to, I mean, it's like I say, it's simple to understand, but very tough to really do it. Because I mean, also from the experience, right? I basically I lost all my cap, my savings, whatever profits, everything disappeared. Poof, just disappeared. Okay, but it's only at hindsight, right? Then I realized, actually I don't need to be so. I mean, I don't need to suffer so much, say real. I could have just stopped at the first step. Okay, refresh, next day go. So how do I get there? Every day I take one trade, right? So that's where I started tuning, like tweaking my strategy, right, to taking one trade a day. That's it. Because I know that, okay, today win, today lose, whatever. Tomorrow I have the same setup again. I just need to wait again. That's it. Okay. Because back then I was sprinting. I say, young 20 years old, I want to run. Why? Because you make money, you feel that, you feel good. I mean, I feel good. So that's my experience. I mean, emotion wise, that's what I felt. Okay, I really want to just whack the market until I make as much as I can every day without resting. You just keep going. But I mean, slowly, I mean, on hindsight now, I think back, it was a good lesson, to be honest. Because after losing everything, I could have just stopped trading already. Okay, because basically I know capital already, right? I know capital, then that time I'm trading full time already. I need to find a job. I say, okay, fine, still young, I find a job, no problem. Okay. But the problem is, the question I have for myself right back then is, do I still want to trade? Okay, I lost my money. I made my money from trading. I lost my money from trading. Am I going to trade again? That's the problem. Okay. So I started to really sit down and think through like what really caused the loss. Okay. Because I mean, I can make profit, right? I know I can do it. It's just that what happened along the way that caused all these problems. Right. So when it comes to your own trading strategy, right? You slowly you will have your own, like in a way, strategy, what indicators you want to use and stuff like that. Okay, so you need to understand your strategy, right? One point that I want to add as well, this is back to TA itself, like chart itself. When it comes to your strategy, right, you need to understand, right, when you back testing, right, is the market running one directional? You all understand what I'm trying to say? If you are back testing your strategy, okay, you need to see if your back testing, right, the counter or the pair or anything that you are testing on, right, is it one directional? Okay, because if it's one directional, right, your strat might not work if the market start to reverse. You get what I mean? Okay, because if let's say it's bullish, you're not bullish, you every time buy, where you buy is confirm a profit. Okay, or bearish, where you sell is the same. But the tough part is market don't always run that way, right? They always a cycle. You bullish, okay, maybe they start to have one small rejection, okay? You bullish already, small rejection, back down bearish. Then you think, hey, maybe flip to bearish. Then you start to ride the bearish trend, but actually it's still running on a bullish trend. Okay, so you need to understand when you back test, right? Your strategy itself, is it running on one direction only? Okay, that one very important. Otherwise, once you put it into a live market, then you will have problems again because you will start to see, wow, the thing correct but I mean, you look very far, yes, is uptrend, for example, but then every uptrend you will always have correction along the way or retracements. Okay, so I think I shared a bit too much already lah. I let Xiong talk first. Okay, so then later I will summarize all this, but that one just a portion of what I want to share only. Okay, later I will have more to share. Okay, Xiong.
Hey guys, yeah, so you guys kind of hear out Ying's live for trading itself. So it's quite interesting. So if you guys got questions, once again, post in the Q&A or chat, we can review it. But why we are here is to actually tell you all how we actually learn from our mistakes, and that some people do give up halfway, but some of us, me and Ying still stay . Are we successful when we first come into trading? Yes and no, because yes, some yeses because of course we profited. That's why we stay here so long, right? Cannot be like we've been losing until now, then we still stay here, right? Yeah, of course, there's good times and bad times, but what you really need to do is learn from your mistakes, and I think that's not a very easy thing to do because I think all of us just don't want to spend too much time in this. We just want to, investment people just tell you, hey, put in this fund 5 years, it's gonna grow. But how many stocks nowadays are like Apple, Tesla? It's very difficult to find. But you can see stocks moving up and down. How do you take opportunity to gain certain profits from these stocks? So we'll show you right after this in our charting and see how we actually place trade. So having Ying here, right, it complements both of our where we are. Ying is doing more towards derivative leverage, but on intraday basis. So what that means is that compared to stocks trading, right, you're doing intraday. So I would say they are feeling a lot more than swing traders. Swing traders, you just put there, enter the trade. You have so much time there, at least a week compared to intraday traders. So you don't feel as much as they do. So I would say that intraday traders do feel a lot more, and they're gonna they have to be aware of what they're feeling at that moment of price entry. So for those who are interested in intraday trading, I think being aware of what you are feeling is very, very important. So if you can see from me and Ying we are here, talking about how we feel and probably sharing with you guys our experience and knowing what we are feeling at that point of time, so that at least during we can make a better decision instead of revenge trading, which is very common. Like we lost money and then we want to take profit again and enter the trade. And I think another very bad habit that we have is being FOMO, fear of missing out. So like your friends tell you, hey, this stock damn cheap Baba now $75, you don't want to buy, you sock. Yeah, so all these you'll be hearing them a lot if you have friends who do investment. Then they're like, wow, Baba so cheap, should go in or not? Should don't go in now? Is it the lowest? Will you profit? How long will you profit? So all these you need to take into account. And I think agreed from Ying part, having a trade journal is very good. So we will share our trade journals with you. Later I'll share mine with you to show you at least how I place my trades, certain trades, how I'm feeling at that point of time. So all these are very important, I think, as a trader. So once again, you guys got questions, please hit us up. If not, we will jump straight into the charting wise and show you guys the certain charts. Okay, so we got a poll right here. Yeah, just let us know, are you like an intraday or swing trader or investing? Because investing wise, you don't have to think. Oh, so sorry, investment wise, right? You technically don't have to watch the market every day, right? You just need to put there and then you like long term, okay, 5 years, 3 years. You're doing swing trading, 1 week, 2 weeks, 1 month, depending how, and then intraday is what on the dot, minutes and even hour. So those feelings that you feel during the trades that you place and even after is very, very important. So yeah, I think Ying and I went for these emotional intelligence courses and we find it very useful. We are aware of what we are feeling and we know what we're gonna do when like we are feeling sad. Like, are we gonna continue trading? Are we gonna cut stop loss, take profit? Like, how are we feeling at that point of time? Are we scared? So all these are very important. We will share them right after this. So I'll hand my time over to Ying right now. He will show you guys what he'll do for a single chart. Okay, so stay tuned.
All right. Thanks for the poll. Okay, I see all the answers coming back. Okay. So most of you are doing swing and investing. Okay, fine. Then when I talk, right, then I will just go more into like swing basis in a way lah. Okay, intraday, I mean, it's still the same. Okay, it's just that we are going. I mean, intraday itself is just lower time frame, but whatever you are looking out for will always be the same. Okay, so I will just want to share like a bit more on, like, for example, just now when I was talking about like over trading and revenge trading, right? Okay, I mean, all these emotions, right? I'm not like Xiao mentioned, is of course it amplifies more for intraday because basically, if let's say you are using a 15-minute or 30-minute chart, right? You basically just looking at, I mean, the candle is just printing every 15 minutes. Okay, but then again, because we are, I mean, intraday itself, you are playing on a lower time frame, your stop loss is not going to be very wide. You are just going to look at it whether you can hit and run, basically, right? So you will feel a lot more emotion because the price itself will be running either to your TP or your SL. Okay, so this one, this point, right, brings me to the on the slides, right, as you see, risk management. Okay, this risk management, I think firstly, I mentioned like you shouldn't shift your stop loss, okay? Because stop loss itself is really going to damage. I mean, if you're going to shift out of your strategy, right, then you basically just going to take a bigger loss than you expect from the trade itself. Okay, this works. I mean, investing, I'm not sure if you really have to cut a loss. Okay, maybe you do. Okay, in terms of like companies that are not performing as well anymore. Okay, but when it comes to risk management, right, I just think, I mean, since a lot of you are swing as well, right? For me personally, right, my risk management, my risk is basically between 0.5 to 2.5%. Okay. With this being said, right, it's not that my risk is good. I mean, I know online you read a lot, like, okay, people start to say, okay, your risk 1% or 2%. Okay, you just stick to that 1 or 2%, right? But to me, it's 0.5 to 2.5. Okay, why do I say that? Because to me, my risk is dynamic. I'm okay to lose up to 2.5. Okay, but I'm not saying that every trade I lose 2.5. I'm not saying that way. Okay, it based on where the chart is printing. Okay, this one I last week also shared with you. Like in terms of even I think 2 weeks ago when we talk about ATR, average true range. Okay, I say okay, you take 2 times ATR, you go and find your stop loss or your take profit, right? Because it's a 2 days average range itself. But then you don't put right in the middle of nowhere. You find a candle that is nicely, at least it's like a supply or demand. At least you know that price coming. You still got a chance to get out, maybe in the loss, but you still can be able to get out. Okay. So my 0.5 to 2.5%, right, is basically coming from this idea where I mean, because I am basically I doing intraday, right? I'm playing on momentum. Okay, I look for range break, same thing that I share with you all every time. That's how I play. But my SL is just a previous candle. Previous candle can be very small, can be very wide, can be gigantic, right? Can be anything. So to me, is as long as my risk is within that, okay, my lot size is the same. Lot size meaning to lot size lah. Basically, how much I going to buy. As long as my lot size is the same, my risk is there. Okay, it's dynamic because I know that okay, this is how much I will 2.5. Unless it's overshot lah. Let's say the SL is too far, then my same lot cannot go in, right? I won't even take a trade. I let it run first. Because to me, it's okay, fine. I just wait. Okay. Okay, since I'm on this now, I think there's some questions regarding that. I think okay, the thing is, let's take a look. I think when emotion got hold of us, discipline, courage, and patience will likely fly out of the window. In this regards, do you think it is better to let robo investor trade invest for us to take the emotion out? I would say yes and no. Depends on individual again. Okay, because everyone is different. Like I explained before. Like yeah, I reach a point where, ooh, all this, I don't even remember what I trading already. Okay, I just keep clicking. That's all I know. Then all whatever I know is just out of the window. I know TA, I don't know TA already. That time I just gambling, right? So all these emotions got a hold of me, right? So if you know that you cannot get out of this, right, then of course robo investor or you put your money, you park money in the fund. Okay, I'll let people manage. Fine, right? But to me, that's why I ask myself, do I still want to trade? Okay, do I want to trade? Is because of money? Or is it because I love to look at chart? I think, yes, money is a byproduct. Okay, but I'm still passionate about technical analysis. I can I can continue to not make money. Okay, maybe someday I will stop. Okay, but luckily for me, the more I look into TA, the more I understand a bit more about myself, the more I'm able to get that the byproduct itself, right? So I understood myself, even though yes, I lost, I make and lose, right? But I'm able to manage my emotions way better now because I'm more aware of it. Because I know it happened before. And I know the good side, the bad side, every side of it. Okay. I don't want to say I know 100% of it, but at least I know myself that okay, I still have more I mean the opportunity cost and in terms of like P&L, right? I feel that yeah, I'm still performing all right in a sense. Okay. So but of course to some individuals, yes, if you feel that wow, you cannot like you emotion already, you lose money already. I mean the first lesson is always not to lose money lah. Warren Buffett said before. Then never forget your first rule, right? Yeah, because it's always about survival. So if you feel that I mean this is really you only can know for yourself whether can you really trade? That's the thing. Okay. Like that's why I say I think the first week when I talk about this TA's workshop, right? I started off with telling you every time I coach someone, okay, one to one or as a group, I always tell them strategy 15%, emotion 85%. This is to me lah, okay, psychological wise 85%, strategy 15%. Why? Say real, I want to share with you my trading plan, right? I can just tell you, and is what I have been sharing with you. Okay, maybe more in depth with how you look for levels, how you look out for price action, when you trigger, when you SL, stuff like that. But other than that, right, it's basically very simple to know. You just write down or you just understand. You look at the chart, you know already. Okay, but the problem is emotions. You don't know. It's only when you are there then you understand, or maybe you don't understand, but you just feel it, right? So that portion I cannot share. I mean, I cannot teach. I only can share my experience. Like, okay, this is what happened to me or what I felt. Then next time you feel this, then maybe you eliminate, you minimize a bit. Not saying that you cannot do what you want to do, just minimize so that you don't get there basically, right? Because end of the day, when I share also, because when I share with people, right, I coach people, of course I want them to make more money than me for sure. They happy, I happy, okay? Because it's a very tough journey. Like trading itself really is very tough, right? So everybody make money, of course I happy. Especially if I share with them, then they make okay, good. But I think end of the day, the emotions, right, is really up to individual. It's really your personality. I mean, I don't know how to pinpoint all this, but it's just how you feel when you're in the market. Okay. So robo investing, yes, I mean that's one way that you continue to be I mean you continue to participate in the market. Okay, it's just that you leave it to other people. It can just be any fund as well. You can just buy into a ETF. You just leave it there, buy it into a fund, leave it. Or you get a fund manager to help you manage. Yeah, I mean that's what you do. Then the fund manager will be the one going through the emotions and go and do all this, basically, right? So I mean there's always a trade-off, right, between like how much you want to make and how much you are willing to lose. Okay. But of course, like I say again, it's about survival. Don't because you think money, okay, no problem, I love money, then I okay to lose. It's not because The problem with let's say I mean I'm not pinpointing anyone but it happens. I mean I know of people that does that okay, they got money okay, maybe not their money. I don't know where the money come from. Okay, but they got money. For example, they got 2 mil. Okay, for example. Okay, every trade they are okay to lose maybe like what 50K, 100 grand, right? So to them it's okay lah. I mean that one is spare money to put Okay, but the problem will come right like when yes you have a lot of money but it's not helping you like psychologically and financially. You have a lot but I mean you don't need to burn it away lah in a way, right? You give me 不是好 right? You know that okay you give me I help you manage you know better I take percentage you take percentage we both happy, right? But I mean, then it comes to a point where it's like gambling because you have a lot of money, but if you keep losing, right, it will damage. I mean, it will just be very damaging to your emotions and your brain. Even though the money might not mean anything to you that much, like in a way, right? I don't even talk about like this kind of huge amount. Maybe we talk about like 1,000. You have 1,000 spare cash, okay? Then you put in the market. Every day you okay lah, one trade, 1% lah, 1%, $10, right? Every day $10 means you are losing like a McDonald's or a Chai fan away already, in a way lah, right? Then end of the day you lose that 1,000. Are you going to stop? I don't know. Most of them will probably try a while more because they feel okay. 1,000, I pay tuition fee. They love telling me this. Okay, the first time they try, it's always tuition fee. I don't know why, but I don't think you should go in a trade with the mentality to lose. Then what for you go into trade? Give me the money better, really, right? So I think I divert a bit more away from the robo investor, but generally it's really up to individual. Okay, you really have to pinpoint for yourself whether you want to continue with what's your agenda out of it lah, basically. Okay, personally for me is I still like to look at charts. I still appreciate TA, okay, because it's always changing and you know it's dynamic. But money comes as a byproduct. I'm happy with it also. Okay. Okay, then question. Wait, hang on, still got question. How to ascertain a stock has already bottom for investing? Buy low will get lower. Do we need to put a stop loss? Okay. Okay, for this question, give me a while, okay? I will go to the chart, then I will show you how I used to do okay? I will just give it to you, how I used to do. But you don't take 100%, You can keep rewatching this webinar, okay? I will show you how I did it, okay? But because I take it as for me, okay? Anything like swing or investing, right? I take it as is technically for the longer term already. Okay, swing maybe I mean, I don't used to swing for 1 week only. I used to swing for 3-4 weeks, maybe 2 months, maximum 2 months. I don't swing anything past that. Okay, but of course with that being said, right, it's not that I keep entering different position. I just take one position, I leave it there, I close eyes, I sleep until they run until wherever they want to run. That's my swing. That's why to me, maybe my swing is like investing also, right? But later I will just roughly show you, not roughly show you, I will just show you what I know okay? I just show you how you can make use of, I don't use indicators like, okay? I mainly just look at supply and demand, okay? I can show you how you can pinpoint your supply and demand, okay? Look for levels that make sense for you to hold it up, okay? Because all this also boils down back to the first session where as long as you know your key level makes sense, right? Your key level will always show you rejection, okay, either from the top or bottom, and where they want. I mean, how many times they touch us, what kind of market cycle they comes in with. Okay, so with that, later I will share on that. Okay, then Xiong, anything for now? Otherwise, I will continue.
That's my question.
Okay.
Okay, yeah, I'm just gonna touch on the questions like would robo investor trade or invest for us to pick out the emotion? So like what Ying mentioned, but I just want to touch on it. Yes and no. So swing trading, intraday trading is not something you can do, right snap off like tomorrow you can do it. So it takes time, it takes effort, it takes a lot of dedication to go through all these and to learn. So if you are looking for robo investor ETF, sure, if it benefits you in a way that you do not have time for trading, then so be it. I think lesser stress on yourself. You let someone manage the fund, or I would support you. But if you're looking to trade, you've got time to trade, you are interested to trade, you don't want to let anyone touch your fund because you're gonna earn much more in the market, then you need to put in this effort. You need to go through a lot of this, creating your journals, understanding your feelings, improving your trading techniques, using the indicators that you're comfortable with, and watching the market. All these you need to put in effort, because it's not going to be tomorrow you're going to perform like 100% really well. Okay, it takes time to realize yourself and understand certain strategy works for you and not. Even when we're giving indicators now, showing you how we take our trades, it's gonna be very different on your hand, because the trading psychologies of yourself is gonna be different from us, because we know where we're gonna take profit and take stop loss. So all these we already plan out before we enter the trade. But for some of you guys, you may be swayed somehow, or if not, you guys don't have time to watch the market, then you will feel like, hey, suddenly not enough. You don't feel so much confident, and then you would exit early. So all these plays a part, and it's gonna be very different. So you can watch all these traders. You can learn from them, but at the end of the day, you need to improve how you trade and understand yourself better. So yeah, I think that's it for the investment side. So I think one of the questions is, Stella, you're late. So feel free, the recording will be up on YouTube, so don't worry about it. You guys can rewatch. Okay, so over to Ying.
Okay. So any questions you can just throw in the chat, in the Q&A, anything lah. Okay, today free and easy. Okay, I mean my style. I like to do it more like free flowing. Otherwise it's very structured. A lot of content. I mean a lot of questions. I cannot get back to you. Okay, so okay lah. I just open the chart first, then I talk a bit more. I think I've been talking quite a bit, but hang on. Okay, this Apple chart was actually from yesterday. I don't know if the yesterday webinar will be up. Okay, basically we were talking about Apple, how you can make use of options to basically do covered calls. Okay, if you are holding Apple stocks. Okay, so this blue line is basically from our Phillip research. Okay, Jonathan came up with a target price of 194. So I was just mentioning that, okay lah, I mean if your target price is 194, and if you are doing covered call and you don't want to get exercise, of course you have to put it above. Okay, don't put it below the level. So this is just like normal basic stuff. Okay, but okay, so now I will just look at chart, then I will share like in terms of when I'm in a trade. Okay, how I look at trade. How I look at it when I'm in a trade, how I'm feeling and everything. Okay, so what I'm going to do. Okay, this one slightly different. I'm not going to do on equity. Okay, but you can take it as TA is the same for all asset class. Okay, I will just do it on something that is already running. Okay, we look at gold. Okay, gold past 2 days running up, today's slam. Okay, so this is what I mean. You have a bullish movement. Not necessarily every day will be bullish. Okay, why? They hit into a supply level over here, all-time high. The level by right is higher lah. Okay, but we have one level over here. Okay, so in terms of trading, right? Okay, I will just answer the Q&A first. Is it advisable to do 5-minute intraday trade? Okay, for this, can you let me know what's your what asset class are you doing? Is it equities or is it what? If equities 5 minutes, right? Maybe still okay, but I wouldn't suggest that lah. Okay, if you on intraday, right? I feel the best the lowest you should go is 15 minutes. Okay, and 15. Reason being, anything below, you will be very subjected to a lot of, you will be going through a lot more emotion. Okay, 5 minutes, every candle give you 5 minutes pretty confirm. Wow, I tell you, you up and down like that. You see, this give you one compression coming into a supply level. What are you gonna do? You want buy, cannot buy, want sell, you don't know whether you get trapped, right? So this is a 5-minute chart. But with 50 minutes, you have clearer picture that okay, they broke a minor area, okay, over here, then price start to continue higher. Okay, but of course where they might stop back at where they broke before lah, right? Same thing. This is the same storyline. Always the same story, right? Then how you find trigger? You find for this pull, they hold above, continue. Okay. So if forex commerce same as me okay, then 5 minutes no I will say no. I mean if you want you can do lah. It's just that you ask me, right? I will say no, it's not advisable. Okay, it's really, I mean no lah, don't do. Okay, lowest is 15, but 15 is it's not a good confirmation candle. Okay, 30 is still the minimum for confirmation. For a candle to close, you look out for next candle, you find movement. Okay, so but in terms of trading, every asset class you look at it, right, it should be the same lah. Okay, even time frame wise, right, the only difference is now since I'm talking about different time frames, why I want to show gold first, right, is because gold is currently running. Okay, I can easier, I mean, to show you like the question that they're asking, how to ascertain a stock has already bottomed for investing, buy lower will get lower, do we need to put a stop loss? Okay, so that's one question that I want to answer from here. But before I go into that, I want to share is the problem when will come, right? Let's say you just keep switching around. Oh, I want to invest today, I want to swing today, I want to intraday the next day. Okay, a lot of people tell me, yes, I want account for swing. Okay, you have one account for investing, you have one account for swing, you have one account for intraday, all different trigger. Okay, it will work if you know how to understand your setup. Okay, not setup, your trade plan. Okay, like I explained just now also, your trade plan very important. Because your trade plan is looking at the same setup, okay, and same strategy, but the trade plan might be very different. Reason being, like I explained to you, your intraday you are looking for 1-to-1, okay, or maybe one to 1 point something like that. Something is always a bonus, but generally it's always 1-to-1. Swing maybe you look 1-to-3, 1-to-4, right? So if you are playing different kind, like I say, different kind, you are trying to be different kind of trader because you want to be all-rounder. Okay, the problem will come because you will start to have expectation on your intraday trade, right? That okay, my swing every time running 3-to-4. Okay, if you are not disciplined with your trade plan, right, you will run into a problem where, oh, my intraday run into a daily level. Okay, wow, my daily look like a very good swing. Okay, then you start to go in your intraday. Okay, look like a trigger to me, I go. Okay, the problem will come because your R and R, right, your risk reward, right, will always got problem one. This one is real one, this one is real one. Okay, because you will start to think, okay, since I trigger on the H4 or D1, I can hold it out. Basically, yeah, H4 D1 more significant, I can hold the trade out. I'm not saying the trade might not run, it might, yes, it will, but most of the time you will run into a problem because you will start to think, okay, I go to hold it out. But the problem comes with because your intraday stop loss, right, it's not as wide as your swing or your whatever investing, right? So you most likely or not, right, you might get stopped out before the thing really run. That's the problem. Okay, so it's very hard to really switch around like, oh, I want to be this, I want to be that. Okay, but generally I think all boils down to how much time do you have. Okay, what do you really like? You want to be safe, risk averse, right? Then okay, then we just invest. Okay, invest also can make money. I'm not saying cannot make, right? So now I go to the question first, like the bottom picking. Okay, bottom picking, intraday, I don't do that. Okay, because like I explained, I don't know where they're going to go next. I don't know where they're going to hit downwards. Okay, so what I want confirmation, I want momentum, I want the price to show me before I go. That's for my intraday. But for swing, different. Why? Because swing, like I explained, you have your stop loss at a level where you know that it's a significant level. You need to know lah. I mean, from your strategy itself. Now I'm showing you is based on me only. Okay, okay. It's not that you need to follow. I'm just sharing with you how I will do it. Okay. So for example, like gold, okay, we know that here a demand. Of course, hindsight, you tell me, okay lah, hindsight easy to say, okay. But I did have a long at 193, 1832. 1832, sorry, it's over here. I was trading over here. 1932. Okay. This one I just showed you a swing. Okay. Another bottom picking was over here. Why I took my 1932. Okay, I got a trade. You want the history, I can give it to you. Right. So how do you bottom pick? Okay, the question will come is based on your strategy, you need to know, okay, this is my strategy. Okay, what I do, like I explained to you all before, market always run in the same cycle, right? You have a range, you have a rally, you have a drop, anything. Okay, it doesn't matter to me because what I want to find is where were all the ranges at. I find the previous range first because let's say I don't know. I mean, of course now easy to say, right? Because they already flew until 2K already, like for gold. Okay, they already fly off already. But back then I don't know, the price was just like this, like this. Okay, so back then when I have this, and I'm looking to swing, right, my first immediate level was over here, correct? This is what I always show you. Why? You have a small range over here, price start to move higher, they create the last level of demand, and they continue going. Okay, then the next level is, okay, I know here was a range, right? Same story. Price went higher, came back down to form the lowest level and never come back again. This is the supply and demand. Okay, and continue to go higher, that's it. So I would generally have these two areas here. Okay, then what happens is, okay, I wait for price to come in. I know that this level over here creates this higher high. They broke the structure, they create higher high. This is a major level. Why this guy is not a major? Okay, they broke a minor range to continue this movement. But this guy here is part of this bigger move. You all get what I mean? Why at the first one, maybe I might not go. The second one, I will confirm go. You get the major and minor now. Okay, because you have a minor level which created from a major, you have a demand form. This level here is basically part of this demand. Okay, the movement. Okay, so with that being said, then of course, your bottom picking will be more clearer because you will just be looking for major. I'm not saying minor cannot, as long as it's a key level, right? A key supply and demand, right? They will always have rejection. I don't okay, sorry, always is the wrong word. 90%, okay, 85%, 90% will have rejection, right? Otherwise, they wouldn't have formed that level back then, maybe. You get what I mean? They need, you know, that price need to start moving. You know that price is held somewhere before they start moving. Means when they come back, those that hold there one, right, will either go in more or they start to have new people coming in to buy. Right? That's the basis of why support or resistance will flip. If they get breached, right, they will turn to a support. I mean, the support will become a resistance, the resistance will become a support, which is also why I had this level over here, because I know that price broke the range below. They continue going higher. Then after they come back to test the previous resistance from support. I don't know at this point support or not, but after that they show me higher high. I know it's a support. Why? You know, otherwise they won't form this last leg of bullish movement outwards. Okay, over here. Yeah lah. So this is my strategy lah. So how I bottom pick? Basically, I just do this. Then same idea. You see, now I talk to you this story already, right? You just look at this guy over here. Why I went at 1932. Okay, it's the same story. Why? I know that price have a range. Price start to break. Okay, so here potentially it might become my resistance and support. Of course, yes, I did try a bit of snipe lah on the intraday, right? But because I was looking at lower time frame give me my discipline, my plan, my trade plan, my setup. Yeah, then I go lah. Then just like is over there, right? So I mean, okay lah, it's not just nice it's over there lah. You need to be in a level before they can reject. But when I'm looking at intraday, right, I don't know that this level is there. I don't draw this guy over there when I'm looking at my M30. Okay, because my intraday, I basically looking at H1, M30, M15, 3 time frame. I trigger on M30. I wait for confirmation on M30. Okay, so yeah, basically I don't know that this is my daily resistance, my turn support. I don't know. But I just base it off my trade plan on a lower time frame that I can find trigger from here. Okay, so how you bottom pick? Back to the question, if I'm not making myself clear enough. Okay, you need to know from your strategy itself. Okay, you need to know for your strategy itself. Like your strategy is do what lah? Basically, you can be RSI, MACD. RSI also different way of picking, you know. Like I just throw in now. Okay, since okay, by right it's trading psychology. Okay, but since we are on this, I think a lot of people also interested to know how. Right, like sniper lah. I love it. Last time I love it, but I learned it. I learned how to not do it as much. Okay. So it's the same. You see RSI. You have this. You see last week, if you all remember, recall last week what happened. Okay. We have an oversold area. Oversold is here. You see, from here all the way to here, they create an oversold area. Right? So if you are using, let's say, RSI, RSI oversold. So where's your buy? Your buy comes in after. I mean, okay, maybe at this point you might not pick this bottom. That's why you need a confluence. Okay, I see whether if I throw MACD can see confluence or not. Since we are on this. Okay, so the bottom is around here. Your only time that you will trigger is probably over here. Okay, so it really depends on the strategy or indicator you use. Okay, but to me is right. I keep it as simple as price action only. Okay, supply and demand. I just need to find my supply, my demand. I just need to know whether it's major level. Then that's it. Okay, but with indicator you can find as well. Okay, so it's always around the same area one because indicator will show lagging. Basically it's lagging, right? So by the time they show the price probably move already. But not saying that you cannot go if you understand. I mean, if you have a proper trade plan with it. Okay, but I have another question now. Okay, saying that how do I spot key level? I think this key level question, right? Okay, I think this how to identify key level, right? I think I say many times already. I don't know lah. Every webinar I confirm will say one. I confirm will say. Okay, but now I give you all one more time lah. Okay, one more time. Okay, I make it very clear. Okay, like how you really go and find. I know lah. Okay, usually maybe counter review, I just draw. You all don't know what I drawing, right? Maybe okay, but now never mind. I show you. Okay, I show you. Okay, so bottom picking, I think depends on your strategy. If you're not sure with your strategy how to find, right, then you shouldn't be bottom picking. Okay, you should just trade your setup. But if you have your strategy, you know what you like to use, what you're comfortable looking, and you still don't know how to really pinpoint how to see, right? Send it to me, Telegram. Okay, you send to me, I will try to show you about the way. Okay, I try to tweak for you a little, but I'm not going to give you the answers lah, because end of the day is your strategy. Okay, I don't want to change your strategy. I'm not here to change anyone's strategy or say, wow, you like that must you clean chart. It's not it's not that Okay, I'm just trying to share with you TA. The TA universe is so huge Okay, there's a lot of ways to do it I'm just trying to show you my way. Okay, so key level, very simple. Okay, very simple. You don't need to think too much. Even okay, let's say for you let's say investing swing or intraday, anything just take it as this is okay investing and swing. You take note now first. Okay, I will show you. Intraday, I will give you something nicer. Okay, like also go, but I'll give you something nicer because if I show you now this chart, right, you won't make sense of it. Okay, so intraday swing, same thing. I mean, okay, now you know that price already running higher. Okay, so I don't want to show you that. Okay, we pinpoint that is a supply back then become a support, price tap into it, become a demand, price tap into it. Okay, I show you what is above. Okay, above also nothing much. Why? Because gold, we know that all-time high was back then $2,080. Okay, that's the all-time high already. But what we can pinpoint is we know that this area here potentially will become a supply level. Okay, not potentially, it is a supply level. Why? You have levels coming up to a level with, I mean, basically it's all-time high. Okay, coming back to a demand level. So basically what gold doing now on a higher time frame, right, is basically they are ranging. Okay, I said to say, but it's ranging. Until they really break above, close above, right, then you have this uplift again, which I don't know where they will go lah. For now, I don't know. I know they are ranging for now. Okay, this is if you are looking at it in terms of this longer term. Okay, so your key level is always you just need to take note. You look back, is there a range level? Okay, all time high harder to draw. Okay, like this kind. You see, last time I just draw just now, it's the same level because all getting rejected. Okay, you looking at longer term is harder because you looking at a lot more hindsight data. Okay, like okay, I just give you another example. Like now, you see, from here very obvious. Gold was ranging back then after a drop, right? As you can see now. Okay, they climb out, they come back, they start this area. Okay, it can be very huge, right? But the key point is because okay we have the resistance over here, right? I mean, everyone agree it's very easy to see. Highest point back then, before they start trading higher, was at this point. Okay, so at this point, you just move your mouse from the left to the right at this area, right? You see whether it got any candles forming. Okay, and if candle forming, you know that okay, they've broken this area and started this small area. So basically, they have a range. They rally, they start a range. Okay, from if you are looking over here So once you have this area, right, you know that this guy here eventually will become your new resistance turn support. Basically, your supply turn demand. Okay, at this point okay, supply broken. Sorry, resistance broken, form demand. You don't know demand confirm until these two taps came in. Then you know that they form a support over here. So with this, right, you know that okay, next time price ever if go ever come back to 1,004 level, right? Oh, it's an easy buy. I mean, I don't know whether easy buy but I confirm go and buy if they come back to 1,004. I confirm will one. I don't even need to think. I just close eyes and go. I mean, this is me. Why? Because I've been looking at gold from like 2017 onwards. Okay, I was in this run. I was in I mean, all the way until now already. And price never come back here already. Okay, maybe back in COVID period. Okay, they tap, boom, straight go. Created all-time high. Go already in history for damn long already. Okay, but all-time high. So from here, they continue to have this supply, right? You know that you see price reject what? Started this area, got rejected. Okay, no. As of now, they are still thinking whether to reject. They are coming close already. Okay, delicate level already. So you just need to think if they cannot close above, then basically they are coming down to the range. Okay, but investing, of course, you don't go and buy right here Okay, you don't have to buy right here. All these levels are showing you, okay, where potentially they might turn. When they turn, where potentially I can go in. Okay, so if you are talking about bottom, right, you always have to look at hindsight and really looking very far. Like example here also. Okay, why? You have this whole rejection coming in. Same story. Of course, like I say, now hindsight, I very easy to draw. Okay, all my answers are there already. Okay, but if you are looking at it, this is your previous range, you know, okay, a minor. After that, they form this guy, strong rejection from COVID, very strong buying power. You know, buying pressure at this point very strong. Why? Because they rejected this whole level of what, $300 of gold, right, in a few days or maybe 1 week, 1 week-ish, right? So this demand area, and you know that, you see, after that, price starts to range again over here and never come back down already. So you know that this guy here, this range over here, this small guy, resistance turn demand, which eventually price starts to get rejected over here first. Correct? So this point, okay, this point, I mean, I wouldn't have called it, okay, even if I play swing, okay, because your whole level is over here. I will take this guy as my demand. I wouldn't take anything lower than that. Okay. So here comes the beauty when you start to bottom pick. You cannot be your only arsenal, because bottom picking, let's say you want to always find a sniper, either the top or bottom, you want to short or long, right? The extremes, right? It will never happen every day, right? So you need to, I mean, it cannot be your only setup that you are looking out for. I mean, maybe it can, for investing, maybe it can. Yes, you just wait for price to come in, you buy, then you just wait. Yes, probably. But for swing, definitely no. Okay. So now, with that, I shift to swing. How you going to find? Okay. I throw back this level again. Okay. So we know we pinpoint supply, turn, demand. After that, price tap, 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 rejected from a range level, right? It's not saying that swing you cannot trigger from here as well. Okay, it can. But like I explained also, the more times something tap into the level, right, the probability of it breaking away is way higher. Okay, must always remember that. I know the classic one is the support and resistance, more taps, more strong, right? Okay, it's not more strong, you all must understand. It's more significant. Okay, means once they break, they will break very hard. Okay, as in not very hard to break, but break very hard, means they will run even further. Okay, so it became more significant, it's not become more strong. Okay, so you need to know lah. I mean, a lot of people tell me, oh, resistance support that many times become very strong. It's not strong, it's just significant. Okay, it's very different, the word. Okay, if you strong, you keep thinking, right, wow, strong, strong, strong. Yeah, it's not strong, it's significant, it's very different meaning to it. Okay, significant meaning once break, bam, the move might come way stronger than, I mean, the area that they run will be very stronger lah. Okay. So if you are looking at swing, okay, you probably take levels. Okay, same thing. Your levels will probably be almost the same as your intraday, your investing as well. Okay, you are finding levels where range will go. But investing might not have all these minors. Like investing confirm will have this, confirm will have this. Okay, for sure. Reason being, you need to break a major to get a major. Okay, minor you don't care. Otherwise, you will have a lot of these kind of small guy, all in between all these levels already. Okay, then you have your resistance from here. You have a lot of levels already. You're investing, you confirm confuse one. Okay, you have all these levels already because all these become minors because they are just part of this bigger move. You get what I'm trying to say? Okay, so bottom picking, string wise, right, will be very different because you need to add in your minor level. A minor level meaning same idea lah. You have to look back to previous data history, okay? Because if, for example, you want to look for bottom, because I take it as swing, yes, you might have confirmation, but your confirmation always comes off a level first. You find a trigger, then you go, correct? For swing. Okay, it's not necessary you always sniper lah. You will find your level first, okay? So at the end of the day, you will still have to pinpoint your area, okay? For example, like this one, okay? For me, I will just draw like that. Okay, so the level that went below why short, I have nothing to do because there's no confirmation. Price came in, yes, lower high. Okay, basically they are still stuck here. They create an equal low, right? Then there's nothing. But in terms of swing, right, the movement will come for me. Okay, is when I know that this was a minor level. Price tried to go lower, failed. They form a range, right? So same idea already. Form a range, what happened? They come down, they create this level of demand. Okay, so along all these levels, right, as long as they can clear area, okay, like for example, you see this guy clear area, there was a range, okay, after that they created a supply from here, right? So when price comes in, right, I will find my swing kind of trade, okay, as and when they will see lah, because it's minor level, but you need to take note because it's a minor level, right? Unless the minor and the major coincide at the same place, okay, then you can fine tune your area to be even smaller. Because for me, yeah, I draw like that, but by right, I will be taking the open or close to the bottom wick or upper wick, depends on supply or demand. Okay, so I hope it answers your question whether to bottom pick or not. Do we need to put stop loss? Okay, now this is the next part. Buy low will get lower. Yes, that's why you cannot buy at a minor if you are investing. you cannot buy a minor. I give you an example, like you see C Limited. Okay, since we are talking about this. Okay, actually a lot of US equities okay. How I mean this one how you bottom pick? You cannot. You see all these levels, right? It's of course now okay, the same thing. You see, now hindsight easy for me to say because I know price here already, right? But back then, you see how they run out, right? There's no proper range, if you get what I mean. The only time might have I might get trapped is probably over here. They form a range, correct? They create a demand for me over here. Wait, like over here, they supply, turn, as in resistance, turn, demand over here. That's all I will look. I get SL there, I look for short already because I know that there's nothing below already. Because this whole area itself, right? They are just running higher and higher and higher. Of course, here you might tell me, okay, smaller range, smaller range, smaller range. Yes, smaller range lah, smaller range, not major ma. So only one I found is here. Okay, so this is what what get lower will get lower lah. So it's the flip side also. What goes higher, right, might go higher as well. Okay, so you cannot keep thinking that yeah lah. But okay, also from this webinar, right, since I'm on this point, wow, sorry, I have a lot of things to say lah. I just keep talk. Suddenly the point come to my mind again. What goes lower will go lower, right? Yes. Then that's why you fear, right? Your SL coming already, or you don't SL, you don't SL, then keep going lower, then you scared, then you want to DCA, okay? You buy more, okay? Dollar cost average very good, equities, no problem, right? But that's not the way to go. You really still have to find levels that make sense for the level, for your triggers. Okay, then what goes higher, you will always want to cut early. Reason being, you keep going higher, you keep thinking, wow, this one today run so much already, cannot run anymore already. So you will cut early. But why stop loss you don't cut early? What go lower will go lower, so why you don't cut early? Yeah, so this is all part of this psychology portion. Okay, then I go back. Okay, last one. I just going to go through my own trading psychology on intraday. Okay, since we have a few intraday traders as well. Okay, yeah, so the bottom picking is like that okay. Then later I will look. We still have a few more Q&A. Then later we will look through. Okay, so intraday I delete everything. Intraday what I'm interested in is from now to later. What will they happen? Okay, back there. Okay lah. I know they range, they rally, they range, they rally. Now currently like range trying to hold inside, right? So basically I just need to know these few points. Okay, then maybe okay I see. Okay, yesterday rally range ready base range a bit, then they continue. So I have my resistance over here. Okay, why this guy is my key level? Why I only look at this guy and I say, oh, key level? Why? I mean I don't know about whether the left side is showing anything. But to me is intraday, I'm only concerned whether price can go higher or lower than this guy. That's it. I don't need to see last time already. My only history is okay, when price starts to come down, can I find something over here back at the previous range? Otherwise, if I'm sitting down now, right, my level is just going to be okay. I know previous support, okay, previous demand support breakdown, price stay below, now price coming up. What can I do? Okay, two things only okay, price come like that, coming down, price go up like that, go back up. That's it. So my intraday like that only, simple as that, like that only. Okay, but of course with that being said, okay, all these candlesticks will have a difference also lah. I cannot just I see going out, right, give me a very bearish candle, I still go long because it stay above. It's not that okay, but this is just the general, like I mean simplest way to really pinpoint your levels if intraday lah. Okay, that's why I say you don't look at M5 because M5, right, you a lot of levels to pinpoint already. It might make sense to you lah. Like for example, you see same thing, you have a range here, price drop, why? Then come back here might become a rejection. Okay, but you will find yourself having caught in a lot of positions. Okay, so always use like H1 or M30 to at least find your levels. Okay, then psychological wise, like yesterday you see gold ran from what 2015. Okay, I take it as a break from here lah. Okay, 2016 all the way to this morning 2052. Okay, that's a run of maybe like what $36. Okay, but usually gold daily range is not so wide one. You see before yesterday's candle, right? Every day is just running very small candle. Okay, only sometimes you have war coming in, you have data, FOMC stuff like that, then it might push. Okay, otherwise generally you won't see a $16 move. $36 move in a day. Okay, then this was during the New York session. Then that's where the volume comes in. Okay, Asian price start to range again, right? Then after that, London comes in, New York opening. So intraday, take note also one more thing. Just now for the question that you asked for forex and commodities. Intraday, if you are doing Forex or commodities, I give you one more hint, one more tip basically. Okay, look out for session opening. Okay, pre-session, session itself, the opening. So basically, I give you an example, like you are trading pound yen. Okay, Asian, I don't really touch. Asian market, I don't really touch. Okay, like for example, pound yen. Okay, you know pound is the currency okay, pound British pound. Okay, you wait closer to UK opening. Okay, UK opening is basically like for now is 4 p.m. Okay, so I will just start my work from 2:30 onwards. Okay, so I just sit there 2:30. I wait to see whether got anything. Okay, because pre-opening and the opening itself, right, will give you the volume, give you the volatility. Your intraday trade, right, can be done in that few minutes. Then you don't need to keep staring at the screen already. Okay, this is the part where I say, now I'm done. I don't even look at the chart anymore already. Unless it's like for now webinar or at night I need to draw some charts, right? But otherwise, other than that, right, when I'm done with my trade, I'm done with it. I don't even look at it already. Okay, so I think that one you need to take note lah. So bottom line is also what kind of trader you are, no? Okay, if you are scalping, then different. Scalping you go even lower. Okay, then that's why you ask me 5-minute advisable. I won't do that lah because I don't scalp. I do intraday. Okay, but intraday to some people might be a few hours, but to me is whatever lah. Just looking at anything in the day itself. Yeah, so depends on depends on what you are looking out for. Then if you have more questions, like I say, you all don't need to say one. If you have more questions, Telegram, you can just look for me. Okay, just draw me a text. Any question, just shoot at me. I will still reply you. Okay, but give chance that I work at night lah. Don't give chance morning I never reply. Don't study. Hey, why never reply? No lah. It's not that I don't reply. Okay, I work at night. Daytime, I will still be awake lah. 9 a.m. I'll be awake, but I would have naps here and there. So okay, y'all just any question can just let me know. I just hand over the time to Xiong for a bit first. Thank you.
All right, thank you. Thanks, Ying. I think that was very interesting. But I think okay, guys, if you guys are still wondering how we spot the support resistance or the different levels, you're afraid of buying at the lowest, do check out our first 1, 2, 3 videos because we went through it on every session, and Ying explain it a lot on every single session as well. So with that, we will move towards the promotional section. Of course, this video is sponsored to you by, PhillipCapital. Currently, we have a few promotions going on. If you guys are interested, for those who do not have accounts, you can actually go to Podium's website, look at the promotions. We are giving out free shares for those new account openers. So if you guys do not have accounts with Podiums, do access that. I think you will receive up to 3 shares, about 180 USD if I'm not wrong. Yeah, then for this, currently we have the options up already. If you guys do not trade options yet, do go and look it up. It's a very interesting thing because you can actually take profit. So in January, we're gonna launch a lot of options trading content. If you guys are curious, do stay tuned. We have already a few market journals up there. So basically options is leverage lah, but you can if you use it properly, it will benefit to you in any market condition. That's what I want to say. You can trade options in any market conditions because there's so many different strategies for you to use. So if you're interested, do join us in Poems. We just launched our option strategy. So with that, we'll go to the next. Now we have the P3 community. If you guys are interested in news, daily news of Poems, we have our research team posting out on the different P3 communities. So just download the app. If you are inside P3, then you will see a few different communities like this. Then we have options groups as well. So go ahead, join them, and then receive updates lah. So with that, that's the communities for P3. If not, you can scan this Telegram link. Just join us. This is the global markets news. Basically, we'll update news every day of summary. So you will see what's going on. So if you have not been in the market for very long, scan this, join us. Then on daily basis there'll be updates for you guys. Then you roughly know, oh, today is what, today US close, today. So all the news will be there in short. Like sometimes I don't watch the market because I'm busy with my daily stuff. And then I just go to this Telegram group and be like, oh, okay, Asian market is happening this and that. The US market, okay, expected like it's gonna come. So it's like a quick summary. So with this, we'll move on to the next group. This will be our technical analysis Telegram group. Ying and Zain. Zain is inside. So you guys got any TA questions? Need to check your levels, ask them questions. Do join this Telegram group because they'll update you the chart for the counters on daily basis. So just check it out. Join the group. If you got any questions, just post it there. They'll answer for you. If not, you can find Ying directly. Okay, so yes, Q&A, we are answering it. So this is not the end of the session. We still got a long session ahead. So I'll be explaining the part. So basically, opening an account with us. If you do not have an account, please open it with us. Then after that, there is promotional content. So do reach out to the trading rep that you are assigned to, and then contact them with regards to this promotional segment. And then shares will be credited to your account. But of course, I think terms and conditions apply, so please read them well. So next will be our survey form. This will be very, very important to us because that's what we know what you guys are thinking. Please help us fill up this survey. If you guys got any content you want to watch, certain things you want us to do, please fill it up. I know this is the last session, but we're trying to improve. So moving forward, we are trying to design with a much more interesting webinars for you guys, catered to especially for you guys. So just fill up this form for us because today is the last day before the December holidays, and then of course January, and next year we are actually preparing for next year. So stay tuned. So once again, yeah, you got questions, you need any certain things, just scan this QR code for us on the feedback form. Just put whatever you need on there. You need us to send you certain stuff. Yeah, just have your email there. Okay, so we'll leave this out for another few minutes. So after this, I will be explaining on the charting and how I look at charts, and then I'll provide you guys with the journals that you guys can reference from. But I think most journal is roughly the same, so there's nothing very special with ours. Yeah, so Ying Jie. Oh, sorry. Okay, I think Ivan. Yeah. So Telegram group. Yeah. So we'll go back again. Telegram group. So yes, this is the Telegram group for technical analysis. So market news will still impact certain stuff, and then technical analysis. So technical analysis is always there, and then it's Ying Jie explain it through his gold and USD, but it applies to your stocks as well. Okay, when you draw on stocks, it's gonna be the same. So you guys have to be worried. Oh, he's doing on gold, he's not doing on stocks. Will it be the same? So it's gonna be the same, and we can ensure that for TA portion. It's just that how different you guys see it from us. Okay, so I hope you guys have do whatever you guys need. If not, we will jump right straight back. 1 more minute. Okay, 1 more minute. Oh, sorry. I'll give 1 minute to Ying Jie.
Okay, so yeah, like Xiao mentioned, this survey is it's not just for this week, it is 4 weeks. Okay, really appreciate everyone being here, listening to us, and also my nagging and all. But nonetheless, yeah, give us your feedback, good or bad. We want to know. Okay, so we can try to improve, like in the future, what kind of content we can give out. Okay, but if you want like a indicator kind of webinar for TA, right? Then this one probably have to watch YouTube on your own already lah. Okay, because we will still try to push like this kind of basic stuff out for indicators. Okay, but I don't think the way I trade is basic lah. Okay, so if you want supply and demand, I won't do a webinar for supply and demand. Okay, if you want to know, then you drop me on Telegram, my Telegram lah. Okay, I already share it in the chat. So if you really want to know, don't. I mean, okay lah. This one I think be fair to like both of us, right? Like not Xiao, like you and me lah. Let's say you really want to know, okay? I'm going to give you my time to share with you, right? So I hope that at least there's some commitment. At least try lah, try first, okay? Try a bit. Don't need to really throw money and all lah, okay? But wow, every time I talk about something, then I remember something again. Talk about this throwing money, live account and demo account. I need to share a bit more because since trading psychology, right? If you keep trading demo account, right, it will not help your live account. It will not. This one is a fact. Don't say that, oh, demo, I make how much. I don't care about demo, you make how much. Because there's no emotion in it. The money is not yours. You make profit, you don't feel anything. You make losses, you don't feel anything. Yeah, you can tell me, okay, yeah, I feel because it's playing money. Yeah, but it's fake, right? So demo is okay to go and try. Try the platform, whether the platform can trigger fast or not, latency, how, this kind of thing. Back testing, okay, fine, demo. But if you really want to be in the market, right, then someday you still need to do live trading. Okay, because you cannot escape from the psychological part of it. To me, like I say, it's 85%. I don't know to many of you is how many percent. Okay, maybe you don't feel it, or maybe then that's good because you know how to manage yourself. I don't know how to manage myself back then. Okay, now I know much better. I want to share this experience. Okay, so demo, yeah, you check the platform and latency and stuff like that, but don't be too engrossed and attached to a demo trading. Okay, because end of the day, demo is not going to give you any byproduct, right? Yeah, that's what I want to share. Then also one question is asking, okay, as a follow-up to this workshop, do you guys think you can conduct a one-day training class, okay, in person, where we can really carry out day trading under your guidance so that we can better appreciate what you have been teaching, telling? Okay, this one also back to my supply demand stuff that I just say, okay, if really, y'all hit me up on Telegram first, okay, if really there's a group, right, free time I come out. Okay, I'm not going to record my stuff. Okay, my stuff is my stuff, right? What I share, yes, most of it is what I use, but there's still tiny details that you need to take note, then you can make it better. Then you can pick. Okay, but I'm not going to let my stuff be recorded. So that's the bottom line. Okay, so if you want, hit me out on Telegram. Okay, I will find time for all this. Okay, I'm just passionate about it. So I'm fine doing it. Okay. Then why Boyan's trading platform cannot trade, sell, put option? Okay, the cash circle put is coming out in first quarter of 2024. Okay, so now we are doing our like testing and everything. So it will come out very soon. Then by then, yeah, we will have more comprehensive strategy for options itself as well. Okay, so any more questions don't have, I throw back to Xiong. You need to talk already. I talk too long already. Okay. All right, Xiong, thank you.
这段时间，yeah, I need get more screen time, not ingesting my screen time. Okay, I will jump straight into chart first. So,
Started by anything. Oh yeah.
So yeah, guys, because that's lagging a bit. Okay. With that, am I lagging? Can you guys hear me?
Lagging again.
Yeah, I think I'm lagging. But anyway, okay, I'll jump right straight to the chart. Okay, so first thing first, trading psychology-wise, I'll just summarize whatever we learned from week one till now. I think first thing first is how you put your chart out and how you see your charts on a daily basis. So if we look at the charts, like where I'm showing it now, you look at this Stellantis, right? This counter. The first thing you will see is actually the candles. And then you must be thinking, !aiya! Chart, everything same. But then you see the colors, they are actually playing on you already. You guys aren't prepared. Okay. So the first thing first is how you guys set up your chart. If you are comfortable with green red candles and you don't feel anything, use this. If you feel something just by looking at the red and green and the money inside, okay. Please go and mic on. Sorry. Just checking on mic. So yeah, so basically, there'll be a psychological factor on you yourself already not aware. So what you can do, there are different candles. Go and test it out. I recommend you guys go and test it out. It's not like everyone is suited for candles. So if you guys basic starting out, look at this line. It's so much better, right? You don't see any green, any red. You just see the blue line there. But you need to understand that it doesn't give you a lot of details. They only give you the closing price of the stock on the specific day. They don't tell you how high, how low, you don't see. But what's good about this chart is that you don't get too attached to the counter. You don't feel like, oh, it's just at certain points it's just moving, the chart's moving. Okay, you don't feel like, oh, wow, today so many 4 red days, like, why am I supposed to be worried? You don't feel that. Okay, so that's I think a lot of people missed out on this because they don't go and try, and then they realize, wow, because people use candle, people say candle popular, then I'm gonna use candle. Okay, it's gonna be different. If you know yourself well, and you can handle candlestick, the red and green charts, so be it. But if not, do this blue line first. Although it doesn't give you a lot of information, it's very clear out there for you guys to draw your support resistance level, your range, and your take profit and stop loss. So with that, that's the first thing. And then similarly, you can do it the same for your volume. So if you guys got a volume chart, it doesn't show you a lot of information as well. So you can actually just change it. So what I'll do, right, for volume, if you guys are choosing, just do something gray lah. Why gray? Why red? Because volume itself, once again, it doesn't show you the amount of buyer or seller. It just tells you that the day is closed at green, closed red. So there isn't really much need for the color coding. So color coding is you guys might not feel it, but every day if you guys look at chart, it plays an impact on yourself. So this is how I'll do my charts if I enter something simple. This is very simple. Just looking at the chart setup. Okay. If you guys are not sure, can try this out lah. You probably won't feel as much as you're looking at red or green candle when you guys enter the trade. So this is just something very minor lah. Then of course, if we do the charting, you're gonna see the support resistance. So how we set profit, take loss, all these profit and risk wise. So it all boils down to your strategy. How are you guys using your strategy? What is your appetite? Are you guys investing 1K, 2K, 3K? All these you guys need to adjust because the bigger you play, there is more emotion. You're more, I would say you are more fearful in the sense that you have more money in the market and that you are afraid of losing them. So your action, you may at certain times you may like close the position much more earlier than it should because you got a big sum inside. So you guys need to know your appetite. Try not to go too big when you're just starting out to trade. Do it small. Do smaller capital trades. You got 10K, do 1K lah. Don't all in 10K one stock. And you're like, wow, pray to God. Okay. If you guys are looking at TA wise, have your plan out nicely and have the patience to. I think one thing is the patience. So if we look at certain charts, I think now is the Chinese era. So you see Baba. Oh yeah, I never pay for this service. Okay, so sorry. Free service is like that. Okay, so let us take a look at Baba. I think it's the FOMO stock right now. Sorry, not Baba. So Baba has been to its lowest. If you guys have not known, then it's like, wow, not the lowest lah. We see one at 65. It's like, wow, Baba so low, should enter now, no? Good opportunity, you know. And then that's where your strategy comes in, right? You apply where you're gonna put your levels, your different levels, and then something that Ying mentioned is patience. You don't enter because people are talking about it. You don't enter because everyone has it. You need to enter at the right time, right price. And what's the right time, right price is when, once again, your strategy comes in. And all these strategies we explain it from our first session to third session. So today is just the trading psychology. So I'll just maybe draw it up, like for you guys to roughly know what you guys should be seeing at this point. Okay, so something very quick is like that. Okay, and then you must understand a stock going down is usually they have news they have certain impacts affecting them It's not because unless you tell me some OTC counters or those without information, then a bit shady lah. But usually stock price goes down because there is certain news, certain impact. There are some concerns over this, and that if you guys go and read up Baba what's happening, you guys may understand why it's dropping. But the TA factor, the strategy wise, is still gonna be the same. What time when you guys gonna go in and take the trade is gonna be the same. Okay, the news, everything you must factor in as well, because that is generally that will generally tells you how the stock will move as a whole in longer time period. But shorter time period, your TA still applies. Okay, so you're gonna draw something like that, and then you're gonna place your chart lah. So the levels wise is roughly the same. I'm not gonna draw much because I think for now Baba is likely gonna fall lower. I think pre-markets already dropped about 2%. So yeah, so for chart wise, as simple as this, go and adjust. If you guys are not comfortable with the candles, adjust to line, then draw your support resistance, and then you guys are gonna look at the price that you guys want to enter and why you guys want to enter, and you will have to record all this. I know it's a hassle to create this journal thing. It's really gonna be a pain because every time you trade, you need to wait, you need to write certain stuff. And okay, I'll share my trade journal right now lah. So you guys give me a second. Okay, you guys can do something as simple as this. Okay, very simple. This is just a draft. You can not follow this format, or if you guys want to follow this format, go ahead lah. So how you enter a trade is you gonna buy. Okay, let's say I really want to buy enter Baba, but then what is good about this trade journal is that you will realize that when you write this trade journal, you will ask yourself, do you want to enter this trade as you write it lah? So why I put certain stuff here, it's all for certain reasons. So I put in date. Why do I put date? Some of you may not put dates, but I would love to put date. So to show that how long I held this stock for. So example today is November. Huh? November 29. Yeah, so okay, let's say why I think of date. So let's say today I want to take in trade. I'm just gonna write like in price. So in price is how much? Let's see, Baba currently 75. Example, this one not real trade. You want to just because I write it down. Okay. I'm just gonna put it down why I write this. Okay, then you guys will understand. So out price, what price? Not yet lah, because you haven't come out one. Okay, then the stop limit, stop loss, and TP. So all these you need to factor in as well. Usually, the risk factor is 1 lah. If you go lower, then a bit. I mean, sorry, if you go higher risk, then it doesn't make sense lah. Usually, I think minimally you put it as 1 because, like, you gain 50, you must willing to lose 50, right? You cannot be you want to gain 50, then you want to lose 100. For those, I think okay, maybe can, but not in the sense that I will do it lah. My risk is at least minimally 1 lah. Okay, so if I'm willing to take profit at 50, I mean risk 50, I want to take profit at least minimally 50 because that makes sense to me. Okay, so my risk reward ratio is basically my stop loss lah. So if I put 70 here, 70 here. Sorry, this should be 18. So it should be 1, correct? So my risk reward is 1 because I'm gaining $5 difference and losing my stop loss is $5 difference. So as simple as this. Okay, if you do anywhere near like something like you want to take profit at you cannot wait. You say you want to take profit at 77, and then your risk is gonna maybe it's gonna go down. Take profit, but okay, basically your risk is gonna go down. Okay, so it wouldn't be balanced really lah, because you are willing to lose more and then take profit at maybe a lower profit, and then your risk ratio. I think there's something wrong with the calculation, but sorry, 70, yes. So your risk will be higher at this point, because it's 2.5 risk now for 1:1 reward. And then you realize that, the risk so high, does it make sense to enter this trade? Then you question yourself. Okay, then you need to, if you're okay, go ahead. No issue. You see, like certain times, this is just a draft, but I put like risk ratio. It's okay to put to lah. If you're willing, you are confident, like what in one of the keys is confident. If you're confident to take a trade, go ahead. Okay. But then this journal will serve as like a secondary stock to you lah. Don't impulse buy lah. Hey, you plan nicely already now. Okay. Then you put in this risk reward. Okay. Then you see, this risk okay lah, because I know it's moving up to 77 for short term. Then then you will register your profit and loss lah. Then remarks, very important. So Ying mentioned how you're feeling, what are you feeling at the point of entry, and then all these you need to write it down. Why? Because like you said, your indicators are in, you're feeling confident. So all these you need to write down. So here I haven't included feelings but do include them, because you have to review all these maybe on Saturday, Sunday, when the market is not running, you got time to see what trades you place. Go and review this journal, because it will help you understand yourself better. Okay, so under these remarks, you see like, I placed this trade, but I look at it now, I lose money. Then why I lose money? Best risk reward ratio. Then you're not confident. So all these feelings you also write down. Okay, so all these you can review on weekends, and then moving forward, you try not to repeat the same thing. So you write down, before you enter a trade again, you go in, you write down everything, and then you look at the remarks. And you look at earlier remarks, because it will remind you of your bad trades. Okay, so something as simple as this will help you with your psychology. So this is just a template lah. You guys have to really follow. You put whatever you guys need in that's more comfortable for you. You can set another new tab called mood. Like call mood. Okay, so as simple as this, then you guys just put how you're feeling. So I put days because I just want to see how many days I take, how many certain profit. What's my profit to days ratio? That means, am I earning 5% on a month basis? Am I earning 10%? Is it worth the trade? Should I go in such trade? So all this is for myself lah. But you guys don't have to add the days. It's up to you. Just be profitable, or at least not making losses for the first few times. If you're making losses, it's fine. You just need to understand why they are there, and then re-strategize, because you need to always improve your strategies lah. Okay, so something as simple as this is just a very short template. Okay, with that, if you guys still got questions, go ahead and put it in the Q&A. If not, I'll hand my time over to Ying to tell you guys more. Okay. Yeah, Ying over to you.
Alright. Okay. Wow. Xiong say something that I remember again. In the chat, the Heikin Ashi chart is that the averaging one? I never use. I have no idea what is that. But roughly, I think I heard of it before. Yeah. But sorry, the one I have no idea what is it. This one, right? Yeah. I don't know how to use that. So okay, I just want to talk like slightly more into what Xiong mentioned, right? About risk reward. Okay, we have one question on risk reward as well. The risk reward, right? Basically, is just the difference between your profits and loss. Okay, sorry, you say wrong. Your TP and SL, okay, from your entry point. The difference between these two, right? So you take this one, you divide by this one. Basically, it's a ratio lah. Give you a ratio like how much is your risk reward. Okay. Risk reward depends on what you are trying to do. Okay, I mean, there's a lot of things lah. But personally, for me, intraday, right, I trade day. My risk reward, right, I say real is I don't really take into account the risk reward. Reason being, to me, right, when I'm trading in terms of momentum, liquidity, volatility, when the price is coming in, that's my setup. My first SL, my first stop loss that I place, right, is to protect myself. Okay. So when the price starts to run up or even run down, right, I will manage my trade accordingly to what the market is showing. Okay, so my R to R, right, my risk reward, right, is basically dynamic, because it's not like, okay, I set, I leave it. I don't see. It's not like that. It's not the case for me at least. Okay, I set already. I see candle print in my direction, continue. I push my SL go up. My risk reward infinite already, technically, right? So I don't really take into account risk reward, but I take into account risk a lot, right? Risk, okay, which is 0.5 to 2.5% for me lah. Okay, then yeah, lor, then the emotion part is, I mean, you just need to manage. You really need to be in it, then you will understand what I'm trying to explain, like in terms of what kind of emotions you're feeling. Okay, then also the day itself, maybe you work, you are today unhappy day, then try your best, don't trade lah, because it might affect how you look at the chart itself. Okay, then emotions, yeah lor. I mean, today's webinar is generally really talking about um the psychological aspect of it. Okay, like for example, now that I am on gold chart again, okay, just now I draw my level, right? It's not that you see this bearish candle that came in, right? It's not that my trigger will come in already. I'm still doing nothing yet. I'm still doing nothing because my general setup, right, is when they break here or they break here. That's it. I'm not going to do anything in between. Of course, if they, I mean, of course, if you look at it this way, right, like, okay, in between, you say don't do anything, then technically this huge thing is still in between, or like this whole area here, right? This whole area is huge thing. But to me, I have a major, I have a minor. I just playing off minor. But my personal like preference, right, is when they start breaking away from range, then I look for the breakout. Okay, so this is, I mean, what I do lah, but anything in between, wow, very bearish, right? Like bearish candle printed, does it affect me? No, because I'm technically not what I need to do, right? But some people might get affected. Wow, I could have shorted here. Wow, just nice the line there. You see, I delete everything. Wow, this was the line that we were talking about just now. Okay, this was the line already. It's already there. This line over here. It's already there showing resistance. Then the price came down with strong rejection because they cannot stay above, right? So some people when they see this, they say, "Oh, I miss a bank. I miss a shot. I cannot. I need to chase the shot now." But it doesn't matter because if you know that your setup is going to happen again, there's no point chasing it when they already. I mean, they is not basically it's not your if you went to set up yet, right? If it's not your setup, the thing can run how far don't make any difference. It's just market just running. Okay, so the good thing is market is open almost every day. I mean, it's 24/5. technically lah, 5 days a week lah. Okay, they are open 252 days a year. Okay, means one day I think we still have 251 days to go, right? So don't chase lah. Okay, when you start to chase, then you if make profit, maybe you stop, then it's fine. But if you make losses, then you slap your hand already. Hand itchy, go and touch. Don't touch, I still break even. But now I touch, I lost, right? Then what you want to go again? Because technically still printing your setup technically lah, or not even your setup. That's the worst because say real when come to trading, right, I wouldn't say okay, like just now Xiao mentioned lah, you weekend you look through your trades, right, look through your bad trades. But to me, there's no bad or good trades okay, every trade by right it should be the same. Setup may be different, how they run might be different, but it should always be the same why you trigger. Okay, maybe you have different setup lah. You have 2 or 3. Don't have like 10 setups lah. 10 setups you trigger all day already. Okay, for me I have at most 3 triggers, 3 setups in a way. Like what I look out for, there I go. What I look out for, I go. What kind of movement there I go. So I have 3, right? So every one of these, right, if I see right, like see one of the setup happen, right, all my trade would always look the same way before I trigger. Not the chart pattern, not how they run, but at least they have the criteria met. Then I will go. Otherwise, I don't go lah. Then I don't go there. Technically to me, I don't bad trade already because all supposed to be right. But if the right trade is losing money, right? It's not a problem because you cannot make 100%. Okay, you just need to make sure that you are always taking the right trade in your eyes lah. Okay, but that's why you need to understand what we went through the past 3 weeks. Okay, find your strategy, understand what's your edge in the market, then you find what is comfortable for you. You trade what you always trading, right? And if your overall your win rate is there, right? End of the day, you should make money, right? Because unless, like I say, unless you stretch your SL, you increase your risk, this kind of thing, this one you go back to what? Back to trading psychology, right? Because otherwise you keep doing the same thing every day, it should work out the same way, right? Like studying. Okay, one thing, talking about studying, I know we are overrun a bit already. I need to faster a bit already. Trading is the only thing, right? I feel okay, time and effort is not relative to your rewards. It's not like studying, you study harder, you study more time, you put more time in, you study, end of the day, unless you panic, right? Otherwise, your results should be good. Like you put in 100 hours to study, like for a professional paper certificate, right? More or less, you should be able to get it, okay? But trading is a problem because you study 100 hours, 500 hours, 1,000 hours, right? It's different for everyone, right? Then that's why over the years, then also why this trading psychology came in now, because it's not because you study more, you look at it more, study more, you know better. But because you can look at it, you know theory very well, but can you trade? You can't. That's why a lot of technical analysts, they can't trade. They know how to look, but they cannot trade. I'm not saying all, okay, but really have. They don't trade on. You ask them what they trade? Oh, I don't trade. Oh, no, maybe I touch a bit. Because to them, they study. Okay, I mean, it's good lah. I mean, you know a lot more, right? But it's just very different from, it's the same like you do demo trading and live trading. It's very different because the psychological aspect is out from the picture and it's just very different already. Okay, so with that being said, I think that's the end, unless you all got any more questions to ask. Okay, so yeah, if you all want more stuff to look at, like my own stuff, okay, I can give it out, but I say I won't give it out for you to record or like notes or what, but wherever, I mean, you all want, you hit me up, then we can talk more first. Okay, then whatever you understand, you understand already. Okay, how to set stop loss in volume? Okay. Xiao, please advise. Yeah, we got a question. So basically, how to set stop loss in Boyon's trading platform. Okay, so if the price, like let's say you buy a $10, price starts to come to $9, how do you immediately buy back the area? Okay, so
Yeah, okay. Okay, wait. Yeah, Stella. Okay, so if you actually go onto Podium's website, we have there right in there to teach you. So we got this stop loss system, whereby if the price falls below certain levels, then you want to sell. So basically, it's a trigger and a limit price. And then there's two price that you have to put in. So first one is the trigger. The trigger is whereby they will, if the price moves below or move, if I sell, okay. So the thing, if it moves below, sells move below. Yeah, correct. If it moves below that trigger price, right, they will submit your limit price into the system. So you need to understand that that is basically a stop limit lah. As one, it's a one order but with two price. One is trigger, one is limit. So they'll basically, once it's trigger, they'll send a limit price. So it's called a stop loss. Yeah, stop loss. So yes, we have that, Stella. So go and check it out. We got, yeah, you can call us up through Night Desk if you guys want to us to help you set up this stop loss in volumes. Okay. Yeah. So yeah. Back to Ying.
okay, sorry. Just one last point. Like before I close off this webinar, right? 4 weeks webinar. Okay. Because okay, like every time I share with people, I coach people, right? They ask me what was the turning point. Okay. Because I told you at the start, okay, make profit a bit, make losses, make profit. I switch to FX, I make profit. Okay. The rocket came when I understood one thing, level to level. Okay. That's the first thing I realized. Okay, level to level, price run level to level. I just need to move level to level. If they can clear, then I look for more. They can clear, I look for more. They can clear, I look for more. So that works in my swing back then, because yeah, they hit first level. Not saying that they hit the first level, I straight up go and take the profit. I don't do that. I wait for them to try to clear. Can clear, we look for the next one. That's it. Okay, so that's the first thing people share with me. I mean, other traders share with me. Level to level. I say, okay. I realized, okay, that's the first turning point. The second one, how I got out from that mess, right, until now, right, I also learned one thing. I mean, also a trader, okay, he shared with me, he just tell me, bro, you see, if you work, right, you don't expect to get pay increment every day, right? Then why are you expecting that from a trading? Okay, so I just want to leave that to everyone. Then I hope you don't rush. It's a marathon, it's not a sprint. We can make profits out of it. Yeah, so continue to trade safe, stay safe. I think we will close out this webinar. I hope you had a great workshop. Okay, 4-week session. Yeah, I think we will see everyone in probably January, right? Then with that, I will yeah, I'll see you guys. Bye bye.
Thank you guys. Thanks everyone. So that'll be the end for this session. So happy trading. We'll see you guys. Yeah, if you guys got question, just hit us up. Okay. Thanks guys. Thanks for the 4-week session. Guys, need more, check out the recordings. It'll be there for you guys. Okay, ciao guys.